Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady and the principal owner of Everett Tax Solutions, where we help you win the tax game. Home Biz Tax Talk airs Monday through Friday. And when you tune into my show, you're going to hear about topics that are important to the small business community. Okay. Today, we're going to talk about what an offer in compromise is exactly. I did a video previously on ways to pay tax debt. And I got a lot of questions about the offer in compromise in particular. I got all of these, messages that said, okay, that basically went through and tried to nitpick everything I said because it didn't apply to this situation or it didn't apply to that situation. So understand that when it comes down to dealing with taxes, period, there are really no absolutes, as it's going to be the same way across the board, as in your tax results, right? Sue might get a refund and Jane doesn't. Well, you don't know their tax situations. Everyone's tax situation is different. So just because one person got one thing, it doesn't mean that you are entitled to or expected to get the same result. Okay. So I definitely want to make that clear because sometimes, like I said, when I make these videos, people say, okay, well, that wasn't my experience. Well, everybody's experience is different, okay? But I really want to talk about this so that you understand how, how this whole process works, okay? So first, what exactly is the offer in compromise? Well, the offer in compromise is just that. It is when you settle your tax debt for less than you owe. Now, there are two different types of offer in compromise. There is the doubt as to liability and the doubt as to collectability. And the doubt as to collectability is really where people kind of fall into, okay? And so the doubt as to collectability is that you're saying, okay, yes, I owe this money. Like there's no mistake. There's no, I didn't claim any expenses or anything like that. It's that you're saying, I owe this debt. I just can't afford to pay it. And there's lots of reasons that this happens, okay? It's not just, somebody went exempt on their W-2 and didn't pay any taxes. Does that happen? Absolutely. You may also have a situation where you made a lot of money and then something suddenly happened and you lost everything. So you may have racked up a tax bill, but that the means by which you had to pay said tax bill has now gone out the window. So there's lots of ways people get to owing tax money and not being able to pay it. So that's where that doubt as to collectability comes in. All right. So now the other thing is, before I get into the rest of it, is that for the IRS to even consider an offer in compromise, you have to be in compliance. That means you have to have at least the last 6 years of your tax returns filed, and you have to have your estimated taxes current, okay? Now, if you've done all these things, great. But we know how, sometimes people don't file for 2, 3, 4, 10 years, right? So when you fall in that category, you got to get those taxes filed before the IRS is even going to deal with you. Now, when you have a tax liability, the IRS has 10 years from the time that the tax is assessed to collect the debt. So let's just say for grins and giggles that you file your 2017 taxes today and your tax gets assessed today. Okay, so then the IRS has 10 years from today to collect that debt. It's not from when the tax was due, it's from the time it's assessed. That means the IRS tags your account and says, yes, on November 18th, 2020, we assessed $10,000 to Lysandra's account and we got 10 years to collect it. Okay, that's how that works. Now, the IRS's job in all of this is to collect as much of their tax money as possible. Now, I say their tax money, but it goes to the Department of Treasury, okay? So their job is to collect as much as possible while you're trying to pay the least amount possible. So we got to come to some kind of agreement there. And so then what happens is the IRS looks at what's called the reasonable collection potential, also known as RCP. You'll get a lot of acronyms when you're dealing with the IRS, okay? And so what the reasonable collection potential is, this is why we use acronyms RCP, because trying to say it all, you get your tongue tied. I don't care how eloquent you are. But what they do is they look at how much you owe, how much you can afford to pay, and how much time is left in the collection statute. Or, so do they got 5 years left? Do they got 10 years left? So they look at all of that, okay? They look at their reasonable collection potential. So let's get to the part about what you can afford to pay, because this all ties together. So the IRS looks at how much you earn, how much your living expenses are based on certain standards, both national and local. And they look at how much you have left over every month. So they take your income, your living expenses, and they look at how much you have left over after at the end of the month, which is called your disposable income, right? And so they will put all of that together, and then they'll basically say, this is how much we think you should be able to pay towards this tax debt, and which is generally going to be more than what you want to pay. Okay, let's just be real. Most people say, I have this tax debt, I don't want to pay anything. And the IRS is going, no, you're going to have to pay something. All right. So, and what they look at is they look at your assets. They look at how much cash you might have in a bank account. They look at your retirement accounts. They look at equity in your home. They look at equity in your vehicles. They look at if you have any stocks and bonds. They look at if you have cryptocurrency. They look at if you have weapons. Okay. So they look at all of this stuff. And if, the IRS basically says, if the taxpayer liquidates all of these assets, would we be able to get our money? Okay. So this is where all of this forms that reasonable collection potential, which basically is the IRS saying, hey, based on this current financial situation, can we get all of our money in 10 years? That's it. That's what they're looking at. And so they look at all those variables. And then if it turns out, if you were once this multi-million-dollar earner and then suddenly you lost everything for whatever reason, where you no longer have $10,000 a month in disposable income, well, that's going to change some things, right? So that's what the IRS looks at and determine that reasonable collection potential over the time of the tax debt. If they can collect their money, they're going to collect their money. Now, does that mean you have to go and liquidate all of your assets to pay your tax debt? Not necessarily. The IRS doesn't care how you get your money. They just care that you pay the bill. So if you can go get this money that you owe, that you've agreed upon to pay that tax bill, they don't care how you do it. I mean, hopefully it's not anything illegal, but if you got rich Uncle Steve that can write you a check and, you pay him back, okay, great. So does that mean you have to liquidate your assets? No, but you come to this agreed upon amount, okay, and you have to pay that. Now, while your offer in compromise is in process, okay, the IRS will keep your refunds. If you get a refund, they are going to keep it, okay? It's not like you're going to be dealing with tax debt and you're going to get your tax refunds. That's not how that works. Now, when they keep these refunds, that does not reduce your offer in compromise amount, and it's not going to be put towards the next year's estimated tax payments either, okay? They're going to keep it for that year. Now, when you get this offer in compromise, if you are fortunate enough to get an offer in compromise, because honestly, very few of them are accepted. But if you are fortunate enough to get that, please understand that for the next 5 years, you are going to be under the microscope. And what that means is you're going to have to file all of your taxes on time, and you can't rack up any more tax debt. So if that means that you have to increase your withholdings on your W-4 and all of that, it is what it is. But you can't rack up any more tax debt, and you have to file on time. Okay, because to not do either of those, if you don't file on time and if you keep it up, racking up tax debt, you will negate that offer in compromise agreement, and the IRS can come back and demand all of their money now. like right now. Okay. And then you might have to, wind up liquidating some assets. So this is not something that you want to play with, in the event, like if the situation that you find yourself in, you get this offer in compromise accepted, and then you go and act all willy-nilly with the government. That is not a good idea. Okay, let's be clear. All right. So that is really the quick and dirty of an offer in compromise and how it works. Okay. Is it effective? Yes, because it has helped relieve people of, some serious financial stress and all of that. Is it difficult to deal with the IRS? Well, yeah. I mean, especially if it's, in the time of COVID and all of that, it was already difficult enough before COVID. After COVID, well, that just made it 10 times worse. So yeah, you can definitely hire someone to help you. An enrolled agent like myself, a CPA, or a tax attorney can definitely help you when dealing with the IRS. So that's it. Okay. So I hope that helps you understand the process of the offer and compromise, how it works, all of that stuff. I know people see the commercials, oh, I owed $150,000 and so helped me settle it for 500. There's a lot that goes into that, into those types of settlements. Don't just think, you're going to have $1 million sitting in your bank and owe the government 150,000 and you're going to keep all that. No, that's not how it works. All right. So thank you guys so much for tuning into Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here to get your questions answered about your home business taxes. All right. Have a great day, and I will see you all next time. Bye.